Can you actually get rich off of the stock market? Where do you need to invest and how much money do you need to put in? Well, in this video, I'm going to show you exactly what kind of returns can you expect from the stock market, how much do you need to invest, and how you can achieve some level of success. Let's check it out. So about a month ago, one of my friends who is really not into investing at all, she asked me, "Hey Sebastian, I have some money to invest in the stock market. Can I double them? Can I get passive income from that?" And I'm like, "Cool, how much do you have?" And she's like, $1,000. I'm like, "No, but seriously, for those of you that are really new to investing, I'm going to show you what kind of returns you can expect and why really $1,000 is not a lot of money to get started in the market, but it is something." So the stock market is basically a place where large companies, usually large companies, go through a initial public offering, and what they do is they basically put up some shares for sale in order to raise capital. And then basically investors like you and me can actually become shareholders, or even large institutions as well, but we can actually become shareholders of these large companies, which is pretty cool. Now, the stock price for every company fluctuates in price, usually in correlation with either the company's current performance or what investors expected that company to do in the future. The S&P 500, which is an index comprised of the US largest 500 companies, has had an average annual return of 10% per year ever since its inception. Now, that's only a historical return, a historical average return, so please repeat with me, past performances are not indicative of future performances. So basically what that means is that just because this has historically given 10% a year doesn't mean that you can be invested for 1 year or 2 years and expect that you would get 10% every year. However, given that we have this historical data, we can make a case that probably if you stick it out over the long term, you can expect to see some profits. Now let's say you will deposit $1,000 every month for 20 years. That's $240,000 invested. At the end of it, you should have around $756,000. Now, if we adjust this for inflation, given that the official target rate for inflation is 2%, we would get an adjusted for inflation total amount of $593,000. So, given that you deposited only $240K and you made over $700,000, you still more than tripled your money, so that's pretty good. Or in the case of my friend who has $1,000 but doesn't necessarily plan on investing it regularly, she could actually throw that into an index fund and with an average return end up with almost $7,000 in 20 years. So it's not a whole lot, but it's still way better than keeping it under her mattress. Now, what we discussed so far are just average returns. However, there are people who are actually able to beat the market on a fairly consistent basis. What this simply means is that they are able to get returns far higher, or at least somewhat higher than what the market does that year. And this is where compound interest really shines. If you do manage to beat the market by say 5% per year, whereas in the first example you invested $240,000 over the course of 20 years and got $756,000, with a 15% yearly return, you could almost double that amount and have over $1.4 million. However, this is usually achievable over the long term only if you're really passionate about it or have really good strategies, or sometimes if you just get really lucky. You should actually be aware that most people tend to underperform the market. But you shouldn't let that discourage you necessarily. You could actually just throw some money like regularly, like on a monthly basis, into an index fund and just get returns in correlation with the market. So, and that's like less than 10 minutes of work per month. Now, two of the best places where you can do that are basically the S&P 500, like I said, which is the US largest 500 companies, or you can also do an ETF, that tracks around all of the world's stock markets, so maybe something like Vanguard World ETF here. So basically that would allow you to get returns which are precisely like what the market is getting every year. However, if you are actually interested, do follow it closely, do have good strategies. It's not actually impossible to beat the market. For instance, this year I have managed to achieve a decent 28% return. However, given that this has been a pretty good year for the market, I cannot realistically expect to make 28% every year. So generally speaking, I would probably be happy with anywhere from 10 to 15% on average every year. So that's kind of what I'm aiming for, but we'll see. Now, also there is the potential for tremendous returns if you're into day trading or swing trading. However, the downside for this is that actually that also comes along with the potential for tremendous losses. And actually over 80 or 90% of the people who try day trading or swing trading actually lose money. And so yeah, it's pretty hard to be successful. I personally just prefer to stick with a long-term strategy and try to achieve, like I said, anywhere between 10 to 15% returns per year. And that should put me in a pretty good place in the next, let's say, 20 years or so. So to conclude, can you actually get rich off of stocks? Well, in my opinion, you can, but that's only if you deposit a pretty decent amount every month. And you also have to wait it out a bit so that compound interest can work in your favor. Anywho, let me know what you guys think in the comment section down below. If you want to see more videos about this topic in the future, please make sure to subscribe. If you liked it, hit the like button. Thank you guys so much for watching and see you in the next one. Bye bye.